Hey, it's Matt with PriceActionTradingSystem.com, and it's Tuesday. It's October 4th. This will be our chart lesson for the day, and we actually got some follow through today. Another big bullish bar bouncing out of there. We went right through the support resistance there. Looks like we've traded right up really to the midline here, so no surprise that we found resistance and really found a hard time going higher from there. Um, we could continue to rally out of here. We'll just have to see what's going to happen. I don't think it's going to be a long-lived rally. I could be wrong, but I think we're still going to go lower here. So we'll see what tomorrow brings. Um, just have to kind of wait and hang on. But anyway, you can see it here. Another really bullish day. The problem was we took all this move really early on, and then we were just sitting up here at the top and couldn't really move. We kind of went sideways, even sold off a little bit before recovering. But that's what usually happens if a market can't go higher. It ends up backing up, and before the day was over there, it took it back and a little bit more though. Um, so let's flip over to the 2,000 tick chart and take a look at it and see what it looks like on the intraday. And here we go, and you can see there was a spike and a channel up. We had a break here. We tried to get to a new high, didn't quite get it. We've been kind of stuck going sideways here. And this was at the top of the bar where we're running into that resistance at the midline, so on the daily chart. So no surprise that we really struggled to get through there. And finally, in order to take it up, they had to let it back up some, and they probably sucked in a lot of shorts here and then reversed it. And then you can see those people really were running for the border here, and it just continued on up into till we made a new high. So we did get a break and eventually a new high. And I probably would have looked for a measured move here. I didn't measure it to see how close we were. Let's just measure it and see. And that would put our measured move up here. And we didn't quite make that. So there's a look at it anyway. And you probably would also measure this first, maybe from here and here. And that would give you two measured moves to there. And that's probably maybe why we had a lot of that resistance across there too. So I mean that's almost perfect with the high of that early range. So just a couple of different ways to look for a measured move there. But yeah, it's a spike into a channel up. We got the break, couldn't get a new high, sold off, and then finally chopped all the way back up, made a new high, and didn't sell off much from that new high really. So just slightly off that high. So very bullish. And just remember, I made some comments on the forum today with some people that were trying to sell this up here long before we ever had a close outside and new high. They're trying to sell this up here. This is a look at this is a spike up and a channel, which automatically tells you it's a very strong market. And then I pointed out here. I'll talk about this when we get to it, just for because I'm sure he's probably not the only trader that. I mean, if when you trade up into a range like this, you still have all this upward momentum from such a strong trend, and that's what happens. The thing had so much momentum that it couldn't really sell off, but it couldn't really go higher either. So it just sits there and chops sideways. That's really what it's really what most of the day was about, really, because from 9 o'clock on we were sideways. So yeah, you can trade that sideways. You could even short this, but when this channel here is still in play and unless you've got a trend working down outside of it, you're not looking for any shorts, and you won't see any shorts marked because there weren't really any good ones. But you still want to be buying in here, and you want to look for good buy setups, and there wasn't much after about lunchtime period. I mean, this is just so choppy into 2:30. So and there really wasn't any setups to get short on this big move here. So anyway, well, let's zoom in. We'll go through the trades, and then we'll wrap this day up. I mean, early on, we had the green channel, which is the spike, and you didn't have this blue channel yet, although you would have had your line drawn, it would have occurred right here. But 7 o'clock came right in here as we're making this new, turning up here and making this high and coming down. So there's no reason to get short in here. There's no real setup, and it comes down here and it bounces where you probably should have had that trend line drawn. It bounces right off of it. Plus that's a measured move down and then a failed break out of that. And look how far away you are from the EMA. So I like that trade. You really could look at that as a 2 legs down. This is basically a double top here, sideways stuff, and then so there's 2 legs down. It's a little choppy and sideways and congested. So, but it's still a second entry right at the key entry point, so far away from the EMA. It's not a sure thing though, so I marked it green, but there's reasons to like that trade. I'd probably want to see us confirm this thing one more time, and then notice it comes back, bounces, and pulls back yet again, and gives you a higher low there, or a little double bottom, and a really big bar. I don't know that I would wait till here and go long, but I really like, and you got to be a little careful about trading on the engulfing bar. But I think you got enough evidence here to say, hey, this channel's back in play. We bounced off of it 3 more times. So if you really understand what's going on here, it's probably okay to take that trade. If not, I wouldn't take it. And I don't think I would wait until this bar closed. I think this is one that when it breaks lower and turns up, you figure and bounces right off the trend line, you probably got them trapped. And maybe you traded on the engulfing bar. You could still take it up here because there is enough room. I just don't know if there's enough room to the midline, and look how many times we turned out off the midline previously. So that's your concern about going long at the top of this bar. If this bar was smaller, by all means, I'd say go long above it. But you got that concern with all that resistance across there at the midline. And notice what happens. It does turn down there again, but once again, it bounces off the key entry point down here. The bounces off this low on the measured move. The stash line is just a measured move on each side of the original channel here. Notice when we broke out, we went a measured move. When we broke out the low side, we went a measured move, and then broke out of that, came back, kind of tested it again, and kind of tested it again. Then we broke out the top again, and it went the measured move before it backed up and bounced off the midline and went higher. So I don't see any other trades in here. And again, I wouldn't go short because of this blue channel. You really can't go short here anyway because it's that's an inside bar, so it doesn't really set up for that. There's really no long here, and it just kind of takes off, and then we're chopping sideways here again. And this is another range, but you can see the trend line coming into play. Notice you get a 1, 2, 3 triple test. This doesn't quite test those lows again, but that's because the EMA and the trend line are there and it's holding. And notice how we closed above it on both times. So there's no close outside the trend line here, so this trend line is still active. And that pretty much confirms it. But you really kind of confirmed it here because you came back twice and tested it. But it's another one I'd probably wait for one more test to be sure, and there it is, you got it now. And then and this is one of those deals where it moves up, goes sideways, moves up, goes sideways, moves up, goes sideways. So when it gets back to the key entry point, if you've got a good bar, take it. And notice you got a new low there, so that's a first entry, second entry, so that's a failed second entry long. And notice there's a high, and it's technically by the count a second entry long and a failed second entry short. I think I said failed second entry long here, but that's a failed second entry short. Notice the new swing low, first entry, second entry. So technically it was a failure when it broke higher there, but this is still, we weren't back to the key entry point, and then it bounces off of it. So with that being a second entry, and I like that trade. And this one is another one you could consider as well because it's right off that key entry point. There's not much room there. Of course, there wasn't much room here either, and that's the thing on all of these is that you have to be able to look and say, hey, this is a really strong trend. And so if you get a good signal bar off the key entry point, you probably take it. And so you probably should take this one too. Only problem is you're starting to get a little ways away from the EMA too, and notice here you can't even, you're bouncing off the midline, so you're not even of the blue channel. I don't know if you can see that in there or not. So you're not even getting back to the trend line, so definitely don't take those. This one would have worked, and I don't think that one would have worked, and but notice they're not off the key entry point either. But when you see these really strong trends, I've talked about these the last couple of days, when you see lots of bars, the corrections just go sideways. They don't even really pull back, and they just keep going higher and higher, and you get lots of stems and lots of little tiny bars. And that's what's going on here. We shoot up, you go sideways. You shoot up, you go sideways. You shoot up, you go sideways. You shoot up, you go sideways, and eventually you get a break. And notice if you just kind of took any nice bullish bar off that key entry point, you're good to go. And this is actually two legs back, and that's a second entry long when this breaks above this. But I'd wait on at least a higher low and maybe a reversal. But you get a higher low there and a reversal there, so if it breaks higher, just go with it. You're going to most likely make a new high. And you got to remember the blue channel's in play, and this is just a temporary channel, a more micro channel than the blue one. And this thing just takes off, runs up to the upper side, turns down. And so now where price is probably headed, back to the trend line. But notice this thing is still so strong that they can't even pull back to it. They just go sideways to it. And there was somewhat of a measured move to this price level across here too. So that played a part. But again, you don't want to be going short in here. Just stay away from them. Just go with longs. And notice this yellow channel break, couple of legs down to a new low, and then you got one moving up. You get a close outside. But on that close outside, notice that new low, first entry, second entry. That's a failure. There's plenty of room to get out before that double top. I like that trade. There's a higher low there, but by that time it looks congested. And you can see it struggles and turns back down. But you would have got your scalp out of it. And it runs back down, and now we're just struggling to go lower. And there's just too much buying coming in at these lows, and it eventually bounces. I like this one just because it's a triple test, but there's a little trap there and it breaks lower and turns up. Again, I don't know that you go long above this bar with that stem, but if you took it on the engulfing bar, there's enough room to get out before the high here. So I like that trade. It doesn't end up mattering. It goes straight on up, and then it comes back again and bounces yet again. But this one, the bar is just too big, and we didn't get through that midline, and so it was real concerning going long into it. And it ends up working, but you just don't know that ahead of time. It's just not worth risking it. This is too congested here, really. Congestion in the center of a bigger range makes it really hard to know what's going on. Of course, it does run up. Again, you can't really look for shorts here. I mean, this is like 2 ticks way away from the EMA, and you could look at that as a triple test. If you're going to take a trade, a counter trend trade, that's the one you take, but I can't even mark it. I mean, think about that, how much volume had to be. 2,000 ticks, and it only moved 2 ticks. So there's a lot of, I mean, there's got to be a ton of heavy selling and buying at the same time coming in there. And you see we had several more bars like that before finally the buyers overtook it. But all they did was run the stops, and boom, the bottom falls out. And you get another 2-bit legs back down to the trend line here. But this is a channel working down. You get a close outside. It tries to make a new high, and it can't. It runs on down. And there's a failure out the bottom, and it's also a bounce off the main trend line, and there's a big bullish bar. Take that trade, because this is a strong trend, and it can't even sell off. It can only go sideways. And so you got the failed breakout, the bounce off the trend line. There's 2 legs back, so on a bigger picture, it is a second entry. Technically, even on this chart, there's a new high right here, so it's a first entry, second entry. If you're not sure about that, when you get a higher low here, the problem with this higher low that I didn't like was the big stem when it closed. If you took it on the engulfing bar, which I wouldn't be afraid to on this bar because we just came off the key entry point, we're probably going higher. Um, we know it's a strong trend. So I wouldn't probably be afraid to trade that as a engulfing bar, but I wouldn't wait and take it long right at the EMA with that much stem. It's just not worth it. And you don't get the reversal here, so it just keeps going. And we went, and generally when you what they do is they'll break it out this side and it'll fail, and that move up will gain that running all these stops, taking all the shorts out, and then turning it. It gives it momentum, and it usually helps them break it out the upside, and that's what they did. They broke it a little higher than they did the time before, and the next time they broke it a little higher than that until they got a measured move, and then it just kind of chops around in the upper half here before it finally runs out of steam and sells off. So that's what they're doing on these breakouts. That's what a lot of times they'll break them out one side to take it back with the trend, and a lot of times it'll succeed. When prices trade up into a range like this, the thought process should be, especially a strong trend, is that if it succeeds on a breakout, it's probably going higher. And if prices trade down into this trend, then we would expect that success on a breakout would be to the downside, and they'll probably fake it out the other side just to give it a little momentum and to run stops and things like that. So just keep that in mind. I said we wanted to talk about this. The trader went short here. Of course, he had his range drawn. I think he drew it off this line. I mean, that's only point up there. I mean, your range is right here. You can clearly see the resistance across there. So for whatever reason, he looks like he's back underneath the resistance here, and it just kissed it and wants to know why it didn't go lower. Well, you still have all the momentum from this uptrend to begin with. And yeah, there's a close outside and a new high, but that's not real convincing. So prices could easily make another run up at it. Plus, we're in an uptrend and we just came off the trend line. So it may just go higher from the EMA. But there's a good chance going that far, we're going to at least get the measured move. So there's all kind of reasons to think this thing's not done to the upside. I sure can't be going short yet. I can't counter trend trade. We're in an uptrend. Even though we're going sideways here, the big pattern is an uptrend. So, I mean, hopefully you can see on my chart, that's not a great place to go short. You had the little range up here and you moved exactly a measured move and bounced. It's really not, I mean, the EMA is probably helping it, but I think what's happening is it bounced originally off this support. This resistance had turned into support, at least momentarily. And it ends up making a lower high here and turning down, and you can't go short right there. So, but what does it do? It runs down to the trend line. Where does it bounce? At the trend line. That's just the first entry, but it's so far away from the EMA, it's off the key entry point. Look how bullish it is. If you want to be aggressive, there's plenty of room back to the support resistance of the range in case it's going to continue in the range. But no, it just takes off again. Really what you have is a leg up, 2 legs of correction, and another leg up. It's not quite a measured move, but that's what prices were trying to do. We're making another leg up here. I'll draw it for you so you can see it. Like so. But we couldn't make a measured move because of these 2 legs, because the measured move on the range itself was holding. So always draw those. But that turns out to be another great move. And you really just don't get another chance to enter that. It's too congested to enter here. And then of course this should be pink again. Just another little range. And the measured move is back to here on the low side and up to here, and look where it went to before it finally broke out. And look at that gap right there, how it gapped. That tells you that support resistance line is probably accurate. It actually looks like it's gapping over this one. You can see it there. And so really what's happened is you can almost remove this one and just say, hey, we just got back in this other one, and the highs moved down just a tad. And there it is, it gaps over it. So and then fails instantly, turns down. They ran those stops quickly. Boom. And you got 2 legs up. All right, here's your measured move again. You got a leg down, 2 legs up, and then another leg down. And again, we don't get a measured move, which would tell you that prices are probably going to go higher still yet. But there's your 2 legs down, and in the middle you had 2 legs up. The market tends to move in twos, so always try to find those as well. It helps. And you just can't really enter in this. You're just chopping around this previous support and resistance line. And market has no traction. It can't seem to go higher. It can't seem to go lower. We're at equilibrium here is what's really happening. The market's in equilibrium. So you got to be real careful because you'll just get chopped up. And then finally they run it up here one more time. And finally, if it can't go higher, eventually it's going to go lower. And it starts running lower. Unfortunately, there's no chance to sell this. It looked like we may get a chance here, and it ends as a doji type bar. And then we're running across here, and again, you don't get a very good setup. It's real tempting to take that right into that support, but you just can't do it. Hopefully, it'll come back and test it and give you a big bearish bar. But it doesn't do that either. And next thing you know, we're getting an overshoot, and this is played out, and we're rocketing up the other direction. And again, I don't see anything that you can buy on the way up here until finally, at this point, this green wouldn't be here, and it would look like this. And so you've got this channel working up, and you get a break, and it's 2 legs back, and there's a triple test there as well, and a second entry long. I like that trade, and you can see it takes on off. You get a higher low here, but not a very good setup. You get a reversal here, but it's too far from the EMA, and you've already had your break in a new high, so it could turn down there. It doesn't. You end up drawing this trend line, and you get the green channel. And it's working up, and that is a higher low, but I just don't think you want to go long right into that. There's not room to scalp out there. And it runs on up, starts working sideways again, right up there in that same area. We'll just draw a new one to make it clear. And you can see that how, and then when it drops down, it's a measured move. That one's a possibility. Again, you'd have to take this one on the engulfing bar. Notice it's a triple test right off the midline, but when it closes down here, it's too close to those lows, and it may not push through. They got a bunch of people trapped, so there's a good chance, but I would only take that on the engulfing bar. And I wouldn't be afraid to take that on the engulfing bar with a triple test. 1, 2, 3. We tested that 3 times, actually 4 right there. So I wouldn't be afraid to take that. I just wouldn't go short down here. You've got to get a better entry or enter on the engulfing bar, and you can't really get a better entry because it's so bearish it drops on down. But you don't know that if you put your stop there. I mean, next thing you know, it stops you in and bounces right there and goes higher again. So you can't risk it. It's just not a very good trade. But you get your close outside the yellow channel and a new low, and then you're still kind of working this sideways business here. So I like this one just because you got a new low there, and you get a first entry, second entry. So if it breaks higher there, it is congested, but the odds are, notice how we're making higher lows here each time. Prices are probably going to go higher. You should get a scalp out of that. So, and you get a whole bunch more in the scalp out of that. Of course, it runs up. And there is a little, the thing is, this is your retest. So I usually don't draw the retest. You're better off not to draw them. So that's why there is a channel there, and it plays out. I mean, I'll just go ahead and show it to you. But I usually don't draw these. And you can see the break, new high, and then we're going the other way. And there is a reversal. Notice it breaks higher, and then you get the second attempt to go long that fails. But it's on the wrong side of the EMA. You might say, okay, that looks like one leg, first entry. That looks like a second leg, second entry. So when it breaks lower right there, it's a failure. But look at that congestion and support, and look how it bounced. And it could have just gone higher. It may not have gone lower, so you can't really take that trade. and then you don't really get a chance to take anything else here, and it's into 230. So there is a higher low here that it looks a little like what we saw over here. So you might take that trade. Really, by the time you get to failure, it's right at 230, and you see what would have happened. You would have got stopped out. So I just don't know that you want to take a higher low right into a double top there. So I didn't mark it either. So I just think it's too late in the day to take anything that's not a perfect setup. So, and there's not a perfect setup there. So that's how I saw the day. Pretty interesting day. A lot of people get confused here, or I shouldn't say a lot of people, but I know people got confused here because they're trying to trade this as a range. And that's okay. You do have to trade it as a range to some degree. But the bias is up strongly. This is a spike. Look at that big momentum move up, and it folds over into this channel, and that channel is still in play. So even though we're going sideways here, that just gives you more clues that, hey, we're in a strong trend, because it can't correct back to the trend line. It has to go sideways to it. So we know there's strong resistance here, and prices are struggling to get through. But you can't sell it unless you get a sure thing. I mean, you don't see any sales there. There's nothing there that would tempt me to sell. You're better off to wait. And if you just take these couple of longs, you probably get a runner on them, and it's all you need. If you stay with the trend, this is what I told the other traders about this trade up here. If you make a mistake, counter trend trade. If you counter trend trade, your entry has to be impeccable. Your timing has to be perfect, and then you still might lose because the bias is up. But if you're buying with the trend, your timing might be off, and you still might survive because you're entering with the bias. So I mean, just like if you bought down here. Just about any one of these, if you'd have bought above, you'd have been okay. Really, the only one that broke higher that looked worth buying was here, and it was fine. Here's another one. It's fine. Here's another one that broke higher. You would have been fine. Here's one. Here's one. But up here, you could break slower. Stops you out. Several of them in here broke lower, stops you out. That's because you're counter trend trade. Don't counter trend trade. That's the worst mistake you can make because, like I said, your timing has to be perfect. And even very skilled chart readers often can't have perfect timing. So you can make a little mistake and be a little early if you enter with the trend. I'm not saying you'll always get a winner if you enter with a trend. Don't misunderstand my point here. The point is, if you enter with a trend, you can make a mistake, and sometimes you'll get lucky and survive. But if you enter a counter trend and you make a mistake or your time is not right, guess what? You're going to lose, and it's going to be quick, and it might be painful. Because there's some big bars up here because people are taking profit. People start taking profit, and all these people got a little bit of profit in here. They're getting scared. They're getting out. And most breakouts fail, so they're just running stops. And then when the stops run out, the sellers take over, and it drops. That's what happened every time. They're fighting to get it up there to hit those stops, and they'll hit a few stops and hit a few more. And then all of a sudden the stops run out, and boom, it runs right back. The sellers are still there, and it runs right back down. Sellers overtake the buyers, and right here the same thing. They're running the stops, and then all of a sudden the buyers stop, and they come back in when it gets back down here again. It's so you can't just don't counter trend trade. That's all I'm trying to tell you. So I went to a long convoluted way, but we're 30 minutes here. I'm going to wrap it up. We'll be back again to do it tomorrow. We'll see what tomorrow brings. I wouldn't be surprised if we don't continue up a little bit, start to struggle a little bit now that we've taken off some of the oversold conditions. So we could still go higher. We could turn down and just the bottom fall out again. Who knows? But we'll see what tomorrow brings early, and that'll give us a clue, and we'll know a little bit more tomorrow morning. But I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.